And so, as institutions start to engage more, especially in more complex areas of the market, how are DeFi and TradFi converging, and what should institutions be asking before they engage with DeFi?
Convergence between DeFi and TradFi is happening through the functionalities that are intersecting between the two worlds. We're seeing major partnerships between DeFi protocols and traditional banks and institutions today in the headlines that were unheard of a couple of years
Hmm.
ago. So this is very exciting. DeFi, I can say it reflects a move toward more efficient processes such as straight-through processing, universal market access, and efficient execution for a wide range of financial functions. And these financial functions may range from familiar functions like trading or lending, or a new number of new business models still being tested, like automated market makers and liquidity pools. So many early DeFi users, I could also emphasize, were institutional and professional investors, according to survey data. And moreover, the range of DeFi activities is currently being offered not just by the DeFi protocols themselves, but it is traditional financial entities that are offering DeFi trading, investing, and other solutions. And it is also crypto native companies that have reached a size and a scale to become registered as legal entities, such as crypto exchanges and many custodians. And they are also offering access to DeFi activities. So the very offering of these DeFi activities already entails clear customer obligations, risks, and mitigation measures. We at GBC have a series of DeFi working groups, and we have a series of open source reports where we go through this in detail. But ultimately, DeFi can integrate with updated versions of familiar frameworks. But we have to be intentional about this. Thoughtful governance is what can turn these open source protocols into resistant, legitimate, and globally interoperable financial ecosystems. And it is important to consider, I want to say, for DeFi, governance is really important. Part of this can involve, there is an opportunity, we're not there yet,
Mhm.
but embedding regulatory technologies to comply with AML, KYC, and other obligations within automated platforms. And if DeFi is going to replace traditional financial functions, it has to provide meaningful fraud controls, market protections, and risk management. So, as I mentioned, for DeFi, governance is important, but another consideration is that DeFi governance is often carried out through decentralized autonomous organizations, DAOs. So this is the closest equivalent to what we have for a management team, operating model, or risk committee all at once. So assessing governance mechanisms is key. Before a fund makes any DeFi-related allocation decisions, I think the first question should not be yield, it should be about governance. And this can be addressed with questions like, who can upgrade the protocol? How are emergency controls handled? What are the dependencies that exist on oracles, bridges, or governance forums? What does voting look like? What does legal and regulatory accountability look like? And it is governance ultimately that will determine who controls this financial infrastructure and how risks are managed. And ultimately, it points to trust.